Okay, what's good, everybody? Sunday service. And today we are going to be talking about seasonality. And the reason why we are talking about seasonality is because I think that this is really important right now, specifically. Oops, let me go back, right? So, um, for my disclaimer, this is for informational purposes only. For those of you on YouTube, do your own research. I'm not a financial advisor. It would behoove you to talk to your financial advisors about your investments and your trades and to do your own research because trading and investing are risky activities. So do so at your own peril. This is for informational purposes. So we're talking about seasonality. The reason why we're talking about seasonality is because we are heading into September. And we are finishing up August, where we had a major correction in August. And seasonality is important because the stock market tends, not always, it tends to do certain things during certain parts of the year. September is typically the worst part of the year for the stock market and for stocks. So when we're talking about September, if you're someone that doesn't have a bunch of positions, this is the best time to potentially buy in a pullback because typically we dip in August and September and then we tend to head up towards the end of the year. Typically, right? So if you're setting yourself up to get into a stock or you're waiting for a pullback, we tend to get these pullbacks in August and September. So, for instance, if you would have bought Nvidia on the pullback in August, you'd be sitting pretty right now if you got it around 90 bucks, or like Ange got it at 100, right? You're sitting pretty, right? And so that's kind of what you want to know is like, hey, what are the months that are the best for the stock market, and what months do stocks typically underperform? And then, like, if you just waited every year and bought around August or September and pullbacks, you're probably doing pretty well in your portfolio if you've done that over the last 5 to 10 years, right? So seasonality is important, and it's not necessarily uh, something that is guaranteed every year. But when we're talking about investing and trading, we're talking about probabilities, right? So if there are months where the stock market does better and there are months where the stock market typically tanks or goes down, it's important to know these things so that you're not buying ahead of a period where stocks tend to go down. And ideally, you're buying at the time when stocks are about to go up, right? So what I wanted to do is this is what I do. So a combination of using Yahoo Finance because they have historical prices that you can download. So if you wanted some information, that's fine. If you wanted some information on what the stock market tends to do at a particular time, go to Yahoo Finance, type in SPX, get the index. SPX is the S&P 500, which is essentially like an all-star team of like the top 500 stocks in the market. So it's a good barometer for the market, in its totality, right? Because you got a lot of different things inside of SPX, or the ETF version is SPY, right? Or the futures version is ES. So just to go get the historical data, I like to go on Yahoo because it's easy, right? And then I'm going to go to time and I'm going to click max, right? Which is going to give me data from December 30th, 1927. 1927. Yes, I said 1927. This is before the big stock market crash in the 1930s. All the way up until today. That's almost 100 years of data, right? And let's see. And then what I can do, let me try to reload this because it's giving me a whole bunch of stuff. Come on, internet. All right, let me try this again. Yahoo Finance, just to show you what I did. Hopefully it loads this time. Type in SPX, go to historical data, right? Try to get a max data chart if it'll pull it up. I should have did this before. If not, I might just take the last 10 years or so, right? Because it's tripping right now. Hold on. Of course. Let's wait. Let me just go pull up. Let's see if I can do 10 years of data. So August, let's go from like January 1st, what would be, 2013. Let's see if it, oh, I'm sorry, start date, January 1st, 2013 to 8, let's say 2024. Actually, let's do 23 because that's when the market was open. There you go. All right, so I'm just pulling up 10 years. If you wait long enough, it'll probably pull up the entire stock market, the entire history of the stock market. But what you can do is just click this download button, right? And then I'm going to download that data. And then the next thing I'm going to do is go to ChatGPT. Can you guys see my screen?
Yeah.
Yes.
All right, so I'm going to put that data into ChatGPT, right, which is 10 years of SPX history. And then what I'm going to do is try to extrapolate some things from it, right? So I'm going to ask ChatGPT, over the last 10 years, what have been the worst performing, let's say the 3 worst performing months of the SPX index. And then ChatGPT is going to do its magic. Come on. There it is. Right. Oh, you know what I should say? I should say of each year. What were the 3 worst performing? And you see it gave me data. It said March of 2020, September 2022, December 2018. See, what were the 3 worst performing months on average over the last 10 years? And see, this used to be a lot harder before ChatGPT, where you'd actually have to go in, look at every single month, do this by hand or on a spreadsheet. But now, if you use ChatGPT, especially the paid version, a lot of this like data aggregation stuff is a lot easier, right? So, what does it say? The 3 worst performing months on average over the last 10 years were September, with an average return of negative 2.21%, and August and December, right? So if you're talking about buying on pullbacks or corrections, August and September, what happened? What did I just do? Let me do that again. And type that in again. August and September are typically the worst months. And if you've been trading for a while, you kind of know that, right? So September is when the market typically drops. And I don't know why it is. Maybe people are coming back or they're reallocating and whatnot. But September is typically a bad month. So if you are already in positions, if it's a swing trade or a trade, you might want to keep your stops tighter in September. If you are scared that your positions are going to drop, understanding that September is the worst month, you can kind of stomach it a little bit better. Same thing with August. Like I had a bunch of positions on before that August correction, and I didn't get out of any of my positions. Why? Because I know seasonally August is a bad month. So I was expecting a pullback, so I was willing to kind of stomach that. I saw, what did I see? I'm just looking at my overall account. I had like, I think I was up to around 200K in my account. And then I saw it drop all the way down to like 175, right? And I was already up 20, 30 bands already for the year. So I pretty much gave up a lot of my unrealized gains in that August correction. But what have we seen since? We've seen the market pull right back. And now my account's around $204,000 because I bought NVIDIA on the way down, and it's been doing really well. Since then, my positions that I bought Nvidia, I bought ASML, and I bought Costco during that pullback, and now those are all winning positions currently in my long-term portfolio. So I bought them all on pullbacks, and now I'm up an extra few $1,000s from where we were at the top of the market, and we still haven't hit those highs that we were at when the market corrected, right? So September, August, typically the worst months. December, I wouldn't call that terrible, but December isn't really great, at least over the last 10 years. So that's like one form of like seasonality is like the months. Another thing is I would ask ChatGPT, because we're in an election year right now. Election years we tend to perform a little bit better, and I know this because I've analyzed the data. So I'm gonna ask ChatGPT, how do we typically, and I wish I had more than 10 years, perform, or I should ask it specifically, um, how does the SPX index perform in election years in comparison to other years? So, from a seasonality perspective, the election years, we tend to have a higher return in election years. So, this is kind of something right now. We're like in a year that's supposed to be more positive, yet we're coming up on a month that tends to be the worst month. So this is another reason why I've been bullish most of the year, is because in election years, the annual return is typically a little bit better, right? And let me see if ChatGPT can search, let's say over the last 50 years, how does the SPX index perform in election years compared to other years? Of course, it asked me to get the other data from the last 50 years, right? But just believe me when I say typically the SPX, the stock market tends to do better in election years. It's something if you want to research or pull more data from Yahoo, if you were to pull the last 50 years, let me see if I can go back at least to like 1990 and see if it pulls it up without exploding Yahoo Finance. There it is. All right, so that's a little bit more data. Let's do that. And this is why I love ChatGPT, because it'll tell you what it needs. And if you can go find it, right? Go find it. Throw it in there. And actually, I should have said last 20 years because I just gave it 20 years of data. And I really just want to emphasize that we're always consistently talking about probabilities. It's math, right? And that's how I trade. Like I'm a data guy, so I want to see what the data indicates, and I get a lot more confidence in my trading and my investing if the data is on my side. So I don't ever really want to go against the data that I have. And if the data is telling me something like, hey, if you're thinking about entering new positions in September, you better wait for that pullback, right? Because if you're at the top of the market, like in August or before August in July, um, uh, if we're talking about July and we're at the top of the market, that might not be a best time to start buying in, right? What the hell? I think it's indexing the data wrong because I know that is not the case. Hold on. Let's say, what did I pull that from? Since 1990? Since 1990, how has the SPX performed in election years versus other years? Hopefully, it doesn't give me an error this time. And then also, as it relates to AI, like I still think there's worlds of improvement that can be done because if you use ChatGPT all the time, like I do, you still need to check the results. So let me make that a caveat. ChatGPT is still not perfect as much as everyone thinks it's going to take everyone's job. I think it's like a tool, and a lot of these AI tools can be used as a tool to make things a lot easier. But you still need to double check your results, right? And see if everything kind of aligns. Um, but typically in these election years, what the heck? This is saying since 1990, the average annual return was 3.04%, but it was significantly higher in non election years. I'm wondering if it's calculating the years up after the election or the year leading up to the election, because I really want the year leading up to the election. And if you just do like general research, like how does the stock market perform in an election year?
Do you need to specify what election?
Yes. Oh, you know what? I should say the US election too. You're probably right.
The U.S. presidential election?
Yes. Typically, though, like you can do this yourself, but typically in election years, the year before the actual like president takes over, we tend to get a boost in the market, right? That's generally what happens, right? So, like, I wanted to just kind of show you that. Like, that's like on an annual basis, but from a monthly basis, if we're talking about months, like September is the worst part of the market. So, or the worst month for the market. So election years tend to be bullish. The year before, like, so right now, elections are typically in November. That year of the actual election before the president is installed, usually what, January 20th, we usually see a boost in the market. And then we usually see a dip once the president is actually installed. That's typically what happens from a seasonality standpoint in the market. And I am using the SPX. I could use the Dow. I could use the Nasdaq, which is mostly tech. But generally, that's what we're talking about. So, like from a month standpoint, like what I'm looking for, and let me go to Thinkorswim. Pull up a normal view. Just gonna pull up the futures, the SPX futures. So if you look at where we currently are, I'm on a 5-year month chart. Look at that dip that we had in August, right? Y'all remember that? Everybody was like, the sky is falling. And then we bounced right back up to where we were, right? Same thing if we look at the NASDAQ. It's the NASDAQ futures. We had this huge dip, bounced right back up. If you look at the Dow, we had that huge dip, bounced right back up. And last one, the engines, the Russell, huge dip, bounced right back up, right? But we're coming into September. So when we come into September, I am always worried, like to a certain extent, because let's go look at where was last September? Last September, red candle. The September before that, red candle. All right. Let's keep going. September before that, red candle. And let's keep going. September. Oh, that's a red candle. I think I just counted that one. Another September, red candle. What was that, like 4 or 5 Septembers in a row? 4 at least? And then we had one green candle. So over the last 5 years, we had one small positive month in September. And then the other 4 years, we had red candles. So this is why I'm saying just go look at the chart. Let's go look at the ES. That's the NASDAQ, right? So mostly tech stocks. Let's go look at the ES. See, last September 2023, red candle. September 2022, big red candle. September 2021, red candle. September 2020, red candle. And then a positive red candle 5 years ago. So, what does that tell you? It tells you that September is typically not the greatest month for the stock market. Yes, we can have an outlier year like this, but that is not typical. And then, even in this year, that wasn't a huge month or of upside either, right? So, in September, August, I am usually preparing for some sort of market correction. And what you could do is also take that same data, maybe over the last 5 years, make sure it's correct, and then go ask ChatGPT, hey, in September, what is the average drawdown? Is it 5%, 10%, 15%, 20%? And then when we hit that number, then you know, hey, maybe this is a good time to start buying, right? Because our average drawdown, let's say if it's 10%. So if you see the ES or the NASDAQ down by 10%, and that's the average number where it tends to bounce back, then when we get close to that number, you should be looking for a buy, if especially in your long-term portfolio, right? Because we're in our worst month, and if the worst month usually corrects 10%, if the market's down 10%, start looking for some deals. Um, Conversely, if you are already in positions and you don't want to necessarily stomach these drops, you might want to start setting up some short positions on the ES or the NASDAQ or the Dow, wherever it is, right? And what I like to do is look at where the highs are, right? So we had a high at 57.21 on the ES. So where I would probably look to short, because we're on August 25th. Can you guys still see my screen, my chart? Yo, I can't hear
Yeah.
you. Yeah. All right. So if our high on the ES was 57.21, I always like these nice big round numbers. So if I were to try to set up a short on the ES, I would try to set it up at 5,700 or 5,800, right? I like 5,700 a little bit better because do I think we're going to make a new all time high in September, which is historically the worst month? No, I personally don't think that that's going to happen. So they tend to dip, either like these indexes, from what I've just been seeing recently, they tend to dip at these nice big round numbers. So if we ever get back up to 5,700, let me go to a weekly chart because I feel like we hit that. Let's see. Yep. Looking at where this opened. So if I were to try to set up a short position, if we hit 5,700, I might take a chance at buying some puts and taking this to the downside for September, figuring out using ChatGPT and historical data from the stock prices or from the index prices that, hey, if we have an average 10% drawdown, then what I'm going to do is go, hey, I'm going to try to short this thing if we get back up to 5,700. And let's say, and I'm not saying it's 10%, but let's say if it was a 10% drawdown on average in September, then my target is going to be like 5,130, right? Which would bring us actually right back down to this low, which is crazy. So, you feel me how I did that? So let me
Wait,
run.
can you run that back?
Yeah. So let's say that on average in the last 5 or 10 years, the S&P when it corrects in a September, it corrects like 10% on average, right? We get a 10% correction. So I
Mm-hmm.
I like shorting things or taking puts, especially if it's a longer swing like this would be, at a nice round number. The next nice round number for the ES is 5,700. I also like the 5,700 because it's close to these all-time highs right here, right? So what I would do is if it got to 5,700, I would set up my short or my puts right there. And let's say if it tends to drop 10%, my target would be 5130. So my target to swing this down to the downside would be 5030. Now I did take that 10% as an arbitrary number. I don't know what it is because I haven't ran it through ChatGPT. But if it were 10%, we had a 10% correction in August, right? From here to here is about 10%. And so I would probably be looking to do the exact same thing. Buying puts on SPY or the SPX when it reaches 5,700, when the futures or the index reaches 5,700, and then shorting it all the way down until the price gets close to 5,130. And look, that was what our bottom was in August. So if I were to set up a short position, that's how I would short it, right? Same thing if we're looking at the NQ. The NQ, it looks like, oh, and see, I already have my alert here. The NQ number I have to short is if it hits 21,000, which is a nice round number. So I got an alert here because this is actually what I want to short because the NQ usually has more alpha, either to the upside or the downside. Tech is either going to go up really fast or go down a little bit further, right? So I would do the same thing here. Go look at the historical price of the NQ and figure out how much it tends to drop on average in September. And where's our next round number that it could get to? Potentially, we're on August 25th over the next week. I wouldn't be surprised if we get right back up to 21,000. However, here it looks like we dropped at 20,000, right? Which is also an even nicer rounder number than 21,000. So if I'm going to set up a short on the NQ, I would like it to get up to 21,000 because if you look at where we were last time, we were exhausted to the upside. If you're looking at the RSI, we were over 70. When you're looking at an RSI reading, 70 is overbought, 30 is oversold typically. And I like to extend mine a little further to 20 and 80 because if we get closer to that 80 number, I know we're really exhausted to the upside. Looking at where we are on the RSI and where we were previously when it got close to 21,000, we got to that upper area of exhaustion right here in this area here. So that's where I would like to short the NQ or QQQ is if the NASDAQ gets back to this nice round number approximately at 21,000. Here in this candle, we didn't even get there. The high was 20,983, but I would really like it if we hit 21,000. I feel like there's going to be a lot of pressure to the downside where people are going to start selling before September. And if you've been investing for a long time, you know that only 1 out of 5 years we're going to have an up September. So there's an 80% chance that the market's going to drop in September. So instead of me just waiting for this correction in my long-term account and then taking the hit, what I could do is I can make some money on the downside. Either I could short the shares of QQQ, right? QQQ is going to look very similar to the NQ because it's the ETF alternative. And so it would be like around 503.50 would be, and actually here I have it at 500, right? So I have all of my alerts set up like, hey, if we get here, like I'm going to be shorting the QQQ. I don't usually like to short the shares. I usually like to buy puts because I'll get more alpha on my money. But that's what I'm going to be looking for. And then maybe waiting until we get down to 431 to get out of my position, to get out of that swing, right? So that's how I would use seasonality to my advantage. If I know we're getting ready to head into a month that's historically bad and that doesn't tend to have a lot of upside. So even if I'm wrong and the market goes up, we just looked at the last 5 years, it still doesn't even go up that much in September. So even if I'm wrong, I'm probably not going to lose a lot of money from a probability standpoint, right? So that's what I would do, and that's what I'm setting up on the NQ more than the ES, because the ES is a combination of the Dow and the NQ or the NASDAQ. So it is never really the captain of its own ship. So I would rather short the NQ or the Dow, and the nice round number at the Dow will probably be 42,000, right? Just looking, if it gets up to 42,000 and we get overextended, it looks like the Dow is actually pretty overextended right now. But it's not, it didn't hit that 70 mark. If we get up here to this 80, that level, and we get up to 42,000, I would think about shorting the Dow. So what I would do is just here set an alert when we get close. And if we're at or below that mark, oh, bam. Or no, at or above. I'm sorry. We're at or above that mark. Get it a little bit underneath because I want to catch it before it hits that number so I could set it up. Set up a trigger, right? That's what I'm going to do. Figure out how much it tends to drop in September, and that's going to be my target for the short position. And you don't know what day in September it's going to drop. It could be early September, it could be mid September, it could be the end of September. So I might pick an expiration date on my puts to be towards the end of the month, right? So if I'm going back to the Qs, my expiration date that I'd pick would probably be something around like September 30th, because it gives it all September to do what it's going to do. And I'd go over here, go find some liquidity. There's, what did I say, around 500. And as we get closer, there'll probably be some more liquidity there. But it looks like around 495 ish. That's where there's still some liquidity. So I might purchase that put right there when we get closer to that 500 number or whatever it was on my chart. And this might change as we get into this next week. Once we get closer to 500, then I'm going to go find a put that has some liquidity near an expiration date that I want, and I'm probably going to take that. I would really like the 500 or more, but I don't see any liquidity, so I might not take that, right? So maybe if I go into October 4th, do I see any liquidity there? No. I'd probably take that September 30th around 495. This is weird, 494.78, but I'd probably take this one right here and then buy this put, and which will essentially be my short position once we hit that mark. And really, I'm not even going to be looking at the Qs. I'm going to be looking at the futures, because this is open 23 hours a day. It's more indicative of current price action. And what I'm really looking at is us getting to that 21,000 level. If we hit that 21,000 level, I'm going to be more confident that, hey, we're probably overextended and we're probably going to have some downside in September. And then after September, once we have our correction, if that happens, then we're probably going to be heading up for the rest of the year until the election. And then the same thing, typically the year after the election, we see a dip. So I'm either going to be thinking about selling some of my positions if I'm in swings after the election occurs. And then one of the reasons why I think that happens after the election is because then they start releasing all the bad data that they were hiding before the election. You know, everything's great with jobs, everything's great with the market. And then once they have another 4 years, it's like in those first few months, they just unload all the crap they've been hiding. You're like, oh, yeah, by the way, the economy's not doing so well, you know. But you already gave us another 4 years, so now we can tell you the truth, you know. So that's what, from my perspective, that's what tends to happen. So that's how I would set up my shorts, and how I would hedge my current positions in my account. If I look at, say, hey, like we tend to have a 10% drawdown. So if I have a 10% drawdown in my account, that means my account might go down by like 20K. So what can I do to hedge that 20K by buying some puts? So if I'm buying, let me go back to, where is it? September. Oh, no, we're in it. go to the Qs. So if a put's gonna cost me, let's say, what's this, $1,200, or no, the strike that I want is going to be around $1,800. I might buy like 10 of those. I might buy 5 of those to like hedge my position, and this options go up. Um, Not like if you look at the delta, this is a 68 delta. So for every dollar price movement, this is going to move 68 cents. So it's not going to go up or down directly with the stock unless you're heavily in the money and you have something that has a delta that's close to a dollar. So the further in the money you are, your options are going to move more like the stock price up here. But if I'm trying to hedge like 20K a downside, if the Qs drop 10%, then chances are I own a lot of tech. So chances are my positions are going to drop 10% as well, which is going to lose me 20,000. So I'm going to buy enough options to potentially hedge that position, right? So if I can stomach the downside a lot more if I'm making money on the downside at the same time. But, and let's say you don't have any positions and you're waiting to get in. I'm not sure we're going to get the same correction that we got in August. But if we do, and you see the Qs or the NQ or the ES dropping to where we were in August, that's probably a good entry point again to start getting into some of these other stocks, right? One of the ones I told you all about that I wish I would have bought, that I was telling y'all that day, it almost hit my price. And look at Elf. I'm so pissed, personally. It was what? What was the low? 140. It was $1 away from my entry price, and then just popped up. I was so mad when I saw this. We were talking about this a couple of weeks ago. My buy-in position was 141, and I wish I would have put it at 142. I would have got in right here at the bottom of this candle, and shoot, I would have been up $30 on this particular stock, right? One of my targets. But if you go look at everything else, HubSpot, was doing okay. What else have we been looking at? ASML, it's doing okay. If you bought, I bought mine, I think at like 880, right? It's doing okay. Nvidia, doing amazing from the bottom. Let's say AMD, doing amazing from that bottom. Same thing here. Missed my price target by $1. Pissed, right? On this candle, the low was 121.83. My alert was at 121. Almost hit my alert, bounced right off. Pissed me off. What else was doing really good? It did, like, cause I'm almost there, right? So it's telling me that I'm in the right direction. Like I got it almost perfectly, but I was $1 off from my target. So if I
Trust me, I understand that feeling.
so if I would have just adjusted my target and risked $1 more than I was willing to risk, then I would have had huge upside on a couple of these stocks that I've been tracking. You know, specifically, AMD was one I was tracking, and the other one, Elf, was the one I really wanted because it's not tech, and I'm overloaded on tech, so I wanted something non-tech that was going to perform well, and I missed it. That's the one I'm really pissed that I missed was Elf. And then if we look at Costco, and remember, these are all on like a lot of my top 20 stocks that I was telling you about. Look at Costco. Like I bought Costco at 830. Costco's been doing really well. Walmart that I told y'all about, it never got to my price of 59, but look at what it did after its earnings. Walmart is at an all-time high again. So just showing y'all some of my plays. XLP, remember we've been talking about that recently. I told y'all that's where you should be finding strength. Look at XLP. It's still been doing well the last few days. Look at Coke that I told you, or Coca-Cola. Look at what it's been doing. It's still up, right? The staples have been doing really well lately. So
Yeah, I've been liking to play with Coca-Cola too, since you said that Coca-Cola was a good little play.
yeah, but just watch, like, from a seasonality standpoint what we're doing. And I always like going to Koi Fan. I got to end in 5 minutes because we got to check out at this hotel. But if we go look at the U.S. sectors, I always like to go look at, like, we're at the end of the month to date, what's overperforming. Staples, XLP, what I've been telling you, I still outperform it. Healthcare, utilities, gold miner specifically. Tech has actually been doing well. Communications, financials, industrials, and building materials. And then everything else, semis, I guess they're kind of positive, but like the strength. So when we're talking about trading next week, I'm still in staples because look at that curve upward, right? And then the whole market, everyone is so focused on tech that they're not looking at the other like pieces of strength in the market. Tech has not been the strongest over the last month. What's been the strongest has been the boring stuff. Consumer staples, Coca-Cola, Walmart, Costco, they're all in XLP. Colgate. That has been where the strength has been over the last month. And everyone's still trying to trade tech, hoping that it keeps going up where it was, and the Teslas and the Amazons, and they've been coming back. But all of the strength has really been in the boring stuff. Healthcare and staples are the top two sectors, and gold, right? So those are the three main areas where I've been trying to do my swing trades. Because if you look at healthcare, if you look at Johnson and Johnson, look at that. If you look at Lilly, look at that upside, right? That's healthcare. Let me see what UNH. UNH hasn't been doing that well. No, UNH has been doing better. Healthcare, AbbVie, healthcare, right? Healthcare has been doing great over the last week or two. So if you were doing swings or day trades, that's where you should have been. And same thing, XLP. The top weighted names in XLP are Procter. Oh, I forgot about Procter and Gamble. That's the one that's been kind of like consolidating and sideways. But everything else, Walmart, I just showed you, Costco, I just showed you. I showed you Coca-Cola already, Colgate. All of the staples have been doing relatively well. So if you would have been swinging or day trading these over the last week or two, you would have made some more money, right? And I'm pissed because I missed another Coca-Cola trade on Thursday because I wasn't paying attention, and a gold trade that my group was in, and those were $1,000 winners on both trades at the position size that I would have traded if I would have got in at the right time. But I'm waiting for pullbacks on these names still over the next week until we see something turn. But we did see tech actually starting to get strong over the last week. So tech is something that I would day trade as well, or swing trade, because that's been relatively strong. And XLK, we're talking about the highest weighted names, have been Apple. So look at Apple come back. Microsoft, not as strong as Apple, but it still came back a little bit. And Nvidia came back. And then what else? And then Amazon came back, right? From here. Those are the highest weighted names in XLK. So if I'm day trading next week, I'm looking at XLP, consumer staples. I'm looking at healthcare, and I'm looking at tech. I'm looking for pullbacks in those areas for day trades or swing trades. And that's pretty much how I'm building my watch list every single week. Same thing. And then you'll see if you go to Koifin, sometimes these sectors switch positions. And if I see next week oil is up and energy is up, and that's what's trending, then that's what I'm going to be waiting for a pullback on, is oil and energy. And conversely, if I'm going to be trying to short something, I'm going to be shorting the weakest name. So oil services, metals and mining, oil and gas, and energy are the weakest sectors. So if I'm shorting anything this week, I'm going to be shorting something in the energy sectors. And I know I got to go to show you one more thing. So if we look at the energy sector, XLE, it's a downward trend. So the highest names, or the most heavily weighted names there, are ExxonMobil. Not doing so well, but this big candle has been a big issue. Let's say SLB, Schlumberger, not doing so well. So same thing, not a pullback, but a pull up to the upside. If it hits one of these highs, that's probably where I'm going to try and short it next week on a day trade or a swing trade. And then what's CVX, Chevron, same thing. These are the weakest areas of the market right now. So if I'm setting up shorts, it's going to be on these names, right? That makes sense?
Yes, sir.
All right. All right, that's it for this week. I'm talking about seasonality. But yeah, if you're looking for bigger short positions coming up for our worst month of the year, that is typical in September. And I typically like to short indexes, or I'm going to be looking for things that are really weak, like Intel. Look at how weak Intel is. So if I get a pop on Intel, I'm going to short that. Boeing is usually pretty weak. If we get a pop on Boeing up here, that would probably be a good short. I'm looking for the weakest things in the market to short, or I'm going to short the indexes themselves, right? All right, that's it, folks. I got to check out in like 8 minutes. So,
Appreciate you, man. Good game.
yeah, Mokama Sunday service. Making it rain without the umbrellas, fellas. Till next time.
All right, man. Safe travels.
All right, for sure. Peace. Thanks.
Peace.